Today we are going to be talking about some business funding. Business funding 101.
Make the money. Don't let it make you.
I'm going to try to make this as easy as possible for you to understand. But we're going to talk about business funding and how that works, what that looks like, how to go about it so that we can get you some money either to start your business or grow your business. To start, I know a lot of business owners come to me with the hope of getting grants. So let me just start by saying, in terms of grants, yes, they are available. Yes, they are an option, but you cannot plan a business around grants. And the reason that I say this is because grants are an if, a maybe. They are not guaranteed. They are not something you can count on. So you want to go into your business, yes, seeking grants, but not expecting grants. So never start a business with the hope of, I want to start with a grant, because that may not be the case. Now, if you have a nonprofit, that may be the case, because with nonprofits, there are steps you can take to get those grant funds prior to you starting your business. But then even with that, there's a ton of capacity building, a ton of background work before you can even get approved for a grant of any size to start a business. So let's talk more about grants. My thought process behind grants is this. A lot of grants are not received because people simply won't take the time to apply, especially for smaller grants. So I highly encourage you to apply for smaller grants, because guess what? They don't get a lot of applications because a lot of people just feel like it's not worth their time. So you have a greater advantage, more than you even know, because they get way less applications for grants that are in small in number in terms of amounts. The other benefit to applying for grants, even when you don't necessarily think it's beneficial to you, is that those organizations often pass your name to other organizations that are also offering money, and you will be contacted to apply for another grant. So there's tons of benefits to applying for grants, even the ones that you don't feel like you qualify for. Someone told me today, in terms of grants, they get stuck on the question, what do you need the money for? So let's talk about, what do you need to get approved for grants? Number one, you need your articles of organization or incorporation, whatever you call it in your state. You need your EIN. You need a business bank account. Create a statement of need that you will use on every single application. A statement of need is simply saying what you need money for. Always pick towards things that will grow your business, such as sales, marketing, advertising, technology. You're going to pick the people who are using that money to grow. They don't want to save you. They don't want to give you the money for you to go under in 2 months. They would rather give it to someone who's saying, I'm adding a new product line, or I'm adding a new location, or I want to add a new marketing and advertising team. Something to that effect. So making sure that when you are writing that answer for what you need the funds for, state simply that all you need it for is to expand your business, and tell them how you plan to do that. Don't overthink it. Don't make it lengthy. It doesn't have to be a paragraph. It can simply be 2 sentences. But you wanted to just say, hey, I need this money because I want to add a new product line, or I need this money because I plan to open up another location, or I need this money so that we can add some new technology. Maybe you need a large piece of equipment that you just can't afford. Create a basic statement of need that you will use in every single application. Don't overthink this. Don't make it harder on yourself. You can use the same answer on every single application. So as long as you have those things, statement of need, bank account in your business name that's associated to that particular business, an EIN, and your articles, you should be fine to apply for almost any grant. Some grants will want some projections and things like that, but where those answers come in is when you look at your business plan. So every business owner, I don't care what type of business owner, you'll have people tell you don't need a business plan. You don't need a business plan per se, but a business plan can be very helpful. So when they ask you, what are your projections from 3 years from now? All you got to do is flip to your business plan, and the answer is there. You can get a streamlined business plan from the SBA. Fill in those answers. It pops out a business plan. This does not have to be a complicated business plan or a well thought business plan. You just want to get the basis of your business written down and be able to articulate what you actually do, what your projections are. So if somebody asks you, you should be able to talk about what it is that business plan has in it. And it's not very hard. Really, your business plan talks about your mission statement. What do you do? Who are your target audience? Those types of things. And those are things you should know anyway if it's your business. So it shouldn't be very difficult for you to create. Now let's talk about loans. I know a lot of small business owners start their businesses by using money that they have either saved, or they use credit cards, or or things like this. And people in minority groups oftentimes don't have the luxury of getting money from their family and things like that. But if you do have that, that's great. But if you don't have that, I completely understand. I did not start with the help of anybody. I started on my own, like most people do. But as I've gone through years of business, I now know that's the worst way to start is by using your own money. If at all possible, you always want to get a loan. And let's talk about that a little bit, because I know a lot of people are afraid of loans. They're like, I don't want that debt. But you do want that debt. That's considered good debt. Anytime you get debt that's going to increase your value or increase your revenue, that's considered good debt. Bad debt is things that give you absolutely no money generation, such as clothes, shoes, all the crap that we swipe our cards for. If you are using your cards for things that don't generate income, then that's considered bad debt. But if it can generate you income, then that's good debt. So let's just start with the understanding that. So the first thing is we need to get out of the mindset that debt is bad. No, it's the type of debt is bad. So good debt is anything that you can get that will increase revenue. So that means getting $100,000 loan so that you can buy this building, or you can lease this building, or pay your employees. That's considered good debt, because you need those things in order for your business to thrive. So when you are starting out, I know it's extremely difficult to get funding as a new business because you have no history. No one has anything to base whether or not you will pay this money back, or even if your business will succeed. So what you need to do is, in each and every single city, there are organizations that give you money for starting your business. Every city has it. You just have to do a simple Google search and look for CDFIs, or nonprofit organizations geared towards small business startups. Something should come up. I know here in Detroit, there's an organization called Michigan Women Forward. It's for women entrepreneurs. They will give you a business loan for a brand new business, something that hasn't even began. But you know what they do require? They require a very strong business plan. So as long as you have your ducks in a row and you can explain what your business is and how you plan to be successful, they will give you complete and total faith and give you a business loan. So make sure you are checking for any type of organizations, banks, CDFIs, are, lenders that work with minorities or lower income populations to get you in business, because they want to give everybody a fair chance. So that's the first thing when you're starting. But once you have started, you want to start thinking about growing and leveraging and moving forward and growing your business, like really substantiating, who you are. So at that point, I had someone today comment on a YouTube video that I posted, and they said that their parents had taught them never to accept money from anybody and never to get into any type of debt. And my response was very simple. There is not a wealthy business person on this planet who does not use OPM. That's other people's money. They do not go in their bank account and fund their next venture. They borrow that money. That debt belongs to the business that they are borrowing for. You should not be owning the debt. You should be debt free personally. Your business should own that debt. Because guess what? If that business fails, so does that debt. The only thing they can do is collect from that business. So understand that. Now, in some cases, you are a personal guarantee. But I will tell you this. In most cases, I'm not going to say all, in most cases, when you have gotten business credit and that business credit does not get paid, they rarely seek the owner, even if you are a personal guarantee. Now, I'm not going to sit up here and act like it never happens, because it does. But there is less chance of them coming after you personally than if you go and get that loan in your personal name. So never get debt in your personal name for your business. Let that debt belong straight to your business. What do you need to get a business loan? I get this question all the time. So making sure that you have at least a 680. There are very few lending institutions that will give you a business loan with less than a 680. There are a few, but guess what? You're going to pay in that interest if they give it to you. So to get the best rates and to actually get an approval, 680 minimum credit score as number one. Number two, you need articles of incorporation or organization for your business. You need an NAICS code that actually matches your business. So if you do construction, your NAICS needs to match what your business name and purpose of your business states. They need to match, because when they start looking at all these documents, they want everything to line up. So that's the next thing. Number three, you need to have an EIN number. This is the only way that the IRS will recognize that you are a legitimate business. So if you do not have this, you are not operating as a legitimate business in anybody's eyes. The fourth thing you need is a DUNS number. You get this from Duns and Bradstreet. DunsandBradstreet.com. You go in there, you put in all your business information, they will send you a DUNS number. The purpose of a DUNS number is so that you can build business credit, and they assign you a profile similar to your personal credit reports. So the DUNS is a credit report for business. This is where when you start getting trade lines and things like that, that they will report how you have paid. So making sure that you get a DUNS number is essential to getting a business loan. You can't even apply for a business loan without a DUNS number. Okay, so let's talk about that real quick. There is a difference between business loans, lines of credit, and credit cards. For business loans and lines of credit, you need to be open and operating for at least 2 years. There are hardly any business lending organizations that will give you funding without being open and operating for 2 years. Now, there are some few new ones that are popping up. For the vast majority of lending institutions, their requirement is open and operating for 2 years. Now, credit cards is different. Most credit unions will give you a credit card for within 30 to 60 days. And typically that credit limit amount is double to 3 times the amount you would get as a personal application. Did you hear that? So say, for instance, personally, you would get approved for $10,000. If you apply for a business card, it's likely that you would get $20,000 to $30,000 versus the 10 as a personal application. So you don't have to wait for business credit cards to apply. You can do that. Just open the account, put some money in there, keep it positive. You can even use it, but keep that account positive. Make sure you keep some money in there, and then you can apply for the business credit card very quickly. And you can still use your business credit card to leverage your business if you aren't yet at the point of loans and lines of credit. So lines of credit, if you don't know the difference, a loan has a set amount of a payment that you pay monthly on a particular amount of money that they have given you. A line of credit is a set amount of money that they allow you to use, and you pay only on what you have used. And usually lines of credit are only open for a certain amount of time. So if you get a line of credit, they may say, okay, this line of credit is for 3 years. You have 3 years to use this $50,000. You use 10. You will only pay for the 10 if you make payments on the 10 and so forth and so on. As with the loan, you get a $50,000 loan, you're going to pay a certain amount every single month because they've given you all the money up front. With the line of credit, you only use as needed. So those are the differences, but you do need to be open and operating for at least 2 years. So where we at? So we got your ARGO codes, you got your NAICS code, you have your EIN, you have your DUNS number, you have your 680 credit score, and you have some tax returns. Having tax returns showing positive revenue streams is going to only improve your chances of getting approved. Back to the business plan. There are some lending institutions who may or may not really feel comfortable giving you the money. So what's important is having that business plan, because with that business plan, sometimes that can be the deciding factor. If they're not sure if they want to fund your business venture, if you have a solid business plan that you can present and again articulate, there's a good chance that they will go in your favor. So this is why, again, a business plan can only be helpful. There is nothing wrong with having a business plan in your possession, just because it doesn't have to be used for any particular purpose, but you may never know in what instance is needed when you're conducting business. There are many instances a business plan will come into fruition of being needed. So make sure you create that business plan. So basically, that's the gist of business funding, business loans. I really encourage you to Google CDFIs in your local area, because they will help lower income people and minorities, or people who just need a little assistance with getting funded in the beginning until you learn the ropes on all of this. So never think that there's no options for you. When it comes to real estate investment, I know a lot of y'all think that there is no way you can do it. You may not have the funds. So let me just say this. You do gotta have some money. You may not need a lot of money, but you need a little money. And the reason I say this is because there are funding options that are available to you, but most times as an investor, you are required to put something in. So you have options like the DSCR loan. The DSCR loan is simply a loan that if your rents are greater than the mortgage payment on that loan would be, they will fund it. But typically you have to put in 10%. So say for instance, the loan is $100,000 and they say, okay, we're going to approve you. You're going to have to put in that 10% of that 100,000 because they want you to have some type of investment in this loan deal. So that's one option, is a DSCR loan. It's a great loan for people who know that they're buying a decent property, that their rents can exceed the mortgage. And let me explain that to you. So you buy a house and you know that this property can rent for $1,200. Your mortgage payment is only going to be $1,000. DSCR will allow you to be funded because they know that that property is valued high enough where they will get paid back. That's one type of loan. Another type of loan you can look at is a hard money loan. A lot of people don't like hard money loans. I happen to love hard money loans. They don't bother me because the key to having a hard money loan is having a very, very strategic plan. Some hard money loans are kind of sketchy, but you have some great companies out there that I personally work with that I think do a great job at making it happen for me. And so I know it can work for you. But basically the way a hard money loan, they look at your after repair value more so than your personal credit or anything like that. They do look at your personal credit, but it's not weighted as heavily as other types of loans. They're looking at the value of that property once it's repaired. So you can actually purchase the property and rehab it under that one loan. In some loan deals, you may not have any payments. Say, for instance, they give you a loan term of 1 year. You can basically go 1 year with no payments and pay that percentage that high ass interest rate at the very end in one lump sum when you close out that loan. So with the hard money loan, the whole thing is making sure you either refi out of that in that time frame that you're financed for, or selling the property. That is the benefit here. It gives you time to figure out your money strategies. And so this is why I personally like hard money loans, because if you don't have the money to buy and rehab, this is a great way to do it. But again, they do require that you have some equity in this investment. So you may have to put in 20%. You may have to put in 30%. But you can get the rest financed under one loan with them and get everything done. So that's another option. Another option is looking at some of the nonprofit organizations in your local city. I know here in Detroit, we have Invest Detroit. We have Detroit Development Fund. There's a few other, Beria. There's a few others who actually help small business owners who have a business of real estate investing. So you can go to them and they will fund your projects. Again, in some cases, like with Detroit Development Fund, yeah, you may have to put in 10 or 20% of the loan value, but you get the money you need to fund your project. So there's all types of deals out here. I do recommend, if you are a real estate investor, that you look to the non-conventional lenders. You can't go to Bank of America or Huntington in most cases for investment property deals. You need to find lenders who focus on investment deals because they are going to give you the best options at the best rates for your type of business. This is not going to be traditional lending in most cases. So I do want to put that out there because I think a lot of people think that all they have to do is go to any bank and they'll get the funding. Typically, if you work with the lender whose sole goal is to work with investors, you're going to get the best rates and the best deals and the most approvals. Please visit my website, QRowland.com. That's QUEROLAND.com. If you want to work with me one-on-one, I do have 1-hour strategy sessions. I also do ongoing business coaching if you are looking to just have coaching through your business growth. I am a business growth coach and a money mentor. So please make sure you follow me on this channel. Like, share this video. I hope this video was able to help you with grants, loans, lines of credit, credit cards, and real estate funding. Make sure you comment and share, and I'll see y'all later.